Hi, welcome to Ghost Talks. Hi, Saravanan.
Hi, Mark.
We are back again to have
Yes.
a discussion once again on bond markets.
Yeah.
I was just scrolling the Twitter today morning and I saw a circular that has come from SEBI. See, it's been quite some time that markets are talking about bond market not being so deep
Yes.
and it's shallow. And finance ministers over the last 2 decades have been talking about bringing depth to the bond markets. I think there is some small light at the end of the tunnel with this circular. That's what I thought I'll discuss with you. You would have also gone through
Yeah,
it.
yeah.
What is your insights on this actually?
So basically, they're talking about a repo transaction where investor can give his security for raising temporary liquidity. Today, the biggest problem is, as you said rightly, bond market is illiquid.
Illiquid. Always it's illiquid.
That's
Yes.
the problem with Indian
You can
bond
buy,
market.
selling is
Selling
a
is a
challenge.
challenge.
Yes.
So liquidity is not there.
Right.
See, I need money for 10 days, 15 days.
Right.
I don't have any option but to sell the bonds in the market.
Right.
That too with a lower price,
Right.
because there is no enough liquidity available in the system. I think that is what SEBI is trying to address with this development, which is very important. See, when we are becoming bigger day by day, we need to have a very good, healthy bond market for our future growth.
Perfect.
Say, for example, I read in a paper that even for an issuer, what is happening today is when you're issuing a bond,
Right.
say suppose he can issue at 8%. Since his bond may be illiquid in the market, he has to pay 1% more to get investors in.
Right.
So
That
he is actually paying more for his
right. It's a
rising
premium
money,
for
collecting money for the illiquidity.
illiquidity.
If
Exactly.
liquidity can be provided to the market,
Right.
he will be able to rise at a lower level,
Demand supply will come and play and the price will be
better for him also.
Absolutely.
So issuer also benefits, investor also benefits, because see, I need only for 15 days I need money. I can do a repo transaction. I give my securities,
yes.
get money.
Right.
After 15 days, I repay.
Yes.
So it's very comfortable for the investors too.
Yes.
I think that's what SEBI is trying to put a framework for helping investors to get liquidity from
So
the
what
bond market.
exactly will happen with this repo facility actually?
Yeah, I think as per what I have read is what they are trying to do is they are trying to collect 0.5% from the issuer. See, in a year, if they are going to issue X amount, out of that 0.5% will be collected by SEBI and will be given to a fund, a clearing corporation they have mentioned.
Correct.
So money will be pooled there. Whenever investors have liquidity requirement, they give their bonds with an agreement that they will repurchase the security after repaying money after a certain period of time,
Perfect.
which is like a
It's
typical
a loan
repo.
on deposit kind of a thing.
Yeah, like banks are doing now. Repo
Yes.
transactions are normal.
Yes.
That's the rate at which interest rates is set. So basically, banks have government securities. If they have liquidity needs, they give it to RBI, take money.
Right.
Like government is the issuer, so government is indirectly supporting liquidity. Similarly, an individual investor will be able to give his bonds and will be able to raise money. Whereas if he wants to sell it, he has to the price will be lower. He'll be losing value of his investment. That they are going to address with this new development.
So
This is my
suppose we are
understanding.
talking about say for 1 lakh crores are being raised in the market through bond issues. So the pooling fund will be having somewhere around 500 crores.
500 crores, you are right.
Yes,
500
that's how it starts. So
starts.
this 500 crores helps some of the investors who wanted to.
Have liquidity will well,
So
because all are not going to have
Absolutely,
liquidity requirement,
absolutely.
and also at see, it may be at a different point of time also.
Yes,
See,
duration
big-
comes in place.
Yeah, so a big investor may not need liquidity.
Yeah.
Very few people may be reading liquidity.
Especially, can it attract retail investors?
Exactly.
That's
That is what
where
is.
it's an opening. We don't
Yes.
know how it's going to pan out,
Yeah.
but at least it gives a small hope that bonds as a market can go deeper than what it is today.
Correct.
It's been highly shallow, and it's not encouraging for retail investors to come into bond
Yes,
markets
yes.
in today's structure. With this coming into,
It can encourage.
I don't know how much time it will take for coming into operation. This maybe over a period of time, retail
Definitely it
investors
will.
can become far more robust in terms of coming and investing into bond markets.
Bond market. So basically,
Good
they're trying to
move, in
improve the
fact.
liquidity. In
Absolutely.
fact, the biggest problem today is, bulk of the, bond market issuance are done by Government of India.
Majority is issued by
Government
government.
of India.
Corporate India is next
Very,
to that.
yeah. So, but over a period of time, I think this will change, and we'll see a vibrant bond market
Absolutely.
maybe a few years down the line. That is
Fantastic.
the idea of SEBI coming up with this circular.
So that's all about this session. We saw this in the circular has come out today morning, and hope this gets implemented over a period of time. Thank you.
Thank you.